Hello, everyone. Hope you're having a great week. Let's talk about what the market's going to look like for the next little bit. I'm going to start off with the U.S. stock market. That's my specialty. I'm going to share my screen and show you just what I'm thinking about on this. Okay, hopefully you can see my screen there. Big green box in the middle of it. Whole lot of green candles going up, right? If you happen to be there in Bali when we all got together and had a great time, I mentioned this. You will have heard me mention this, but there are a number of studies done. This is one that I did by myself as well, and published the results of, and that was that if you take a 20-day period, roughly a month in trading in stock market trading days, and you measure how much the S&P 500 has increased during that 20-day period, then any time you find that the S&P 500 has risen 10% in any 20-day period, that from day 21 and going forward, you have a bullish market for the next year. On average, from that point going forward, the market will go up more than 10% for the rest of the year. I mean, it might go up 5%, might go up 25%. On average, every time this happens, it goes up 10% or more. Also, this red line right here was a study conducted by Ryan Dietrich, and it was found, and he found that when you have a period where, a year where from the beginning of the year up until the last day of April, and this is really interesting because there's an old saying that goes, sell in May and go away, right? So a lot of people really expect May 1st to be kind of a high point or somewhere thereabouts. And so they want to back off and not buy the U.S. stock market. But his study showed that if you, in fact, have a year that starts off like this, where it's up 5% or more during this first, January through April, well, that has happened in the past 50 years. That has happened 25 times. And 23 out of those 25 years, the market goes up more than 10% from May 1st all the way through the end of the year. So these are two different studies measuring two different things, but they both said this is very bullish, right? When I was in Bali, that's what I said too. It's like, I'm bullish and expect to stay bullish, not because of the geopolitical environment, not because of anything that was going on, right? Just because historically, that's what it tends to do. And so far, that has been right. That has been the thing. I mean, market's been going up, right? And what do I think it's going to do? Well, I think it's going to continue to trend up. But here's the difficulty, that this upward movement goes for about anywhere from 30 to 90 days. And then it tends to sort of slow down and pull back, and then it gets going again, right? Well, we've definitely gone a ways, and now the question is it going to come back a little bit from here? I don't think it's going to come back a lot. I think it's, still a good buying time. But that little signal right there, just the last 2 days, big candle up, then this one down. If in fact we were to get a red candle on Monday, right? if that red candle comes, that pattern, large green candle, little bit of a gap, almost a doji-ish, a small body candle, and then a, a red candle, especially if it's a significant red candle, that is what's called an evening star candle pattern. An evening star candle pattern tends to create at least a short-term reversal. Can be a long-term top, but I've seen a lot of evening star candle patterns not really show up with with tops, ultimate tops. I'm just looking here, in fact, to see if over the past year, which was a good year, we could even find a evening star candle pattern. And I don't see what. Yeah, there's one right there. See this? Well, actually, no, that's not. That's not green, and then followed by immediate red. So it does pull back a little bit, but it didn't last long. Here, this one is. This one is. See how it goes up green, then you got actually a doji, and then you get that big green one. And this one is right in the middle of the tariff tantrum bit, and notice that the price was already going down. See, that's a big key. These evening stars, if they're already in a downward move, they can signal another downward move to follow. But if they're right up there at the top, see, this is kind of one right there, and just nothing. Off it goes, right? So even if we were to get an evening star pattern right there, I wouldn't expect this to be a serious pullback, and certainly not the ultimate top from where we are. So I think that we might not have. This has been an incredible run. We're probably not going to have that kind of a run right from here, but I do think it's going to trend forward and continue to go higher. So what in fact would that mean for currencies, right? Let's look at this one, Aussie yen, because it is not US dollar related, right? Interestingly enough, the Aussie yen, hopefully you've heard me say this in the past. If this is the first time you're ever hearing me, then this will be new to you. But the Australian dollar, Japanese yen pair tends to be highly correlated with the U.S. stock market, specifically the NASDAQ. And so if this thing is going up, the NASDAQ is likely to keep going up. Look at what it's doing. It is making a series of higher lows right here and making a flat top. Oops, I'm not sure why that thing's, yeah. This pattern, this ascending triangle, they call it, is bullish, right? The idea is, especially if it, 1, 2, 3, 4, 5, the next move is a breakout. If in fact a breakout occurs, it retests and keeps going. It doesn't always happen that way, but that's what people in candle pattern world like to predict is going to be the case. There's this really nice website called the Pattern Site, and Tom Wojtkowski years ago did a bunch of candle index specific. Oh no, those aren't candles. This is a chart pattern. Yeah. Let's go rank. All right. Well, let's go alphabetical. There we go. Bull market. Oh, event patterns. That's why I'm in the wrong place. Sorry. There we go. Visual index. All right. So we're looking for the ascending triangle, and there, that one. Okay. The overview is overall performance rank for up or down breakouts. 1 is best. This is 16 out of 36. Oh, no, 16 out of 39, 30 out of 36 for down down market. So this is really more an up market. And it's about middle of the road. Okay? And it tends to, the break even or failure rate for up is 17%, and average rise and decline rise is 43%, and the throwback and pullback rate is 64%. Percentage that meet their target, 70%. Okay, so if this thing does break out, it does hit its target 70% of the time. If it does break out, there's a 64% chance that it will pull back. Okay, so that's pretty good information. I mean, we don't know that this is precise. This is just his back test. But see, what it's saying is, if in fact you see a breakout on this, well, it's highly likely, two out of three times, right? Is there we go. If in fact you get a breakout, then what you're also going to see 2 out of 3 times is the possibility for this thing to come down, and pullback is just going to go to the first line. Throwback's going to come clear back to the second line, right? So you really need to sort of expect for that to break out and then make a dip. But then 70% chance that it goes and meets its target. Now the target is this line up to that line, right? Added onto the breakout. If we look at that, 114.73 to 116.83, I mean, hey, that's kind of cool. That's a 200 pip move. We could do something with that, right? So if you see the Aussie yen break out and then pull back below that line, get ready. That's probably a pretty good buying opportunity. I mean, you don't know for sure that it's going to keep going. It's not guaranteed, but it's got a better than random chance that it will, and so that you will be able to kind of like, buy in here, set the stop there, and get ready for that. My style is I like to take a larger stop loss and do something like that, right? Risk reward ratio 5, yeah. So give it 400 pips, take 200 pips, that sort of thing. So, am I reading that right? Is that 200 or is that 2,000? Anyway, that's a big move. For this one, I actually think the better trade would be something like, that. Do a tight stop loss and go for a risk 1 to make 2, a Jaguar kind of trade. I like this setup really good for that. Now, why would I say that the Australian dollar should break out and do all this stuff? Well, because if it's highly correlated, if the U.S. markets and the Australian dollar, Japanese yen are highly correlated, and if the U.S. markets are going to keep going up, this thing's probably going to keep going up too. Why are they highly correlated? That's a real interesting question, but I think the answer is pretty easy. It is that the carry trade, which is usually the US dollar and the Japanese yen, also applies to Australian dollar and Japanese yen. Large banks are willing to take risk in trying to harness and trying to garner out those positive returns that you get from the rollover, because the Australian dollar is higher and the Japanese yen is lower in price. So that is what the driver is behind this trade, and I think it's a good-looking setup. Yeah. So here, let me do one more here. We'll just go to USD JPY, because of course, if this one's going right, then maybe we should see something similar on the dollar again. Well, there are a lot of dynamics, geopolitical at the least, that are going on and making the U.S. dollar different from the Aussie dollar. But you can see it is rising. It's less of a you know clean pattern. It's kind of a messy pattern, and so this one doesn't give me the same degree of confidence just looking at it here. Um, in terms of U.S. stocks, if you're interested, I would tell you look at the airlines. There's Delta Airlines, big old breakout, right? And other airlines, American Airlines and Alaska Airlines. There we go. They're all making this. That one's coming off a double bottom and just barely trying to break that. But that's still a pretty good look. Nice bullish look. Last of all, United Airlines. So airline stocks, if you have a taste for playing U.S. stocks, that's probably a pretty good one. As you can see, they've sort of hit a interim top there. I would expect that there's a pullback. So during the coming week, you could buy on the dip, and yeah. But Delta is probably the best of them because Delta actually owns a oil refinery, and oil is going to start. Crude oil. There's going to be a lot of it that has to be refined, and so they Delta's in a perfect spot right now. They either win by low oil prices because there's more people that want to travel, or they win because they're refining a whole lot of oil and it's in a high demand spot. So as you can see, this chart looks better than the others. There's a reason for that. That's the fundamentals behind it. All right. Well, that's it. Should be a bullish week for U.S. dollar and Aussie yen and airline stocks. Until next time, everyone, take care and trade well.